Hello everybody, welcome back for another video. Hope you're all doing well and that you are all having a great day. There is a lot to cover today, so let's jump right into it. There will be a diverse set of Ethereum stakeholders that will be in attendance at an upcoming developer call, according to Ethereum's Foundation Communication Officer Hudson Jameson, set to take place today at 14 o'clock UTC, if I'm not mistaken. That is noon Central European time, and I believe 6 a.m. New York time. Don't quote me on these exact numbers. I feel like some of those are incorrect. The live-streamed event, hosted by Ethereum, aims to address some of the platform's most challenging questions ahead of its system-wide upgrade planned for October. As part of that upgrade, there are several non-contentious Ethereum improvement proposals, or EIPs, already ready for testing, but also included are others that have stirred up controversy, and there are quite a few. In particular, 3 concepts: 1, the difficulty bomb; 2, Ether issuance; and 3, the ASIC Resistance, are at the heart of the debate, since each could have a lasting impact on how the blockchain operates. For instance, these codes proposals could alter the regularity of Ethereum upgrades, change the network's economic policy, and prevent specialized hardware from mining on the blockchain. As such, core developers that usually attend the meetings have called for a larger set of voices, namely Ether miners and investors, to be present to discuss a way forward. They said, "There's a strong community sentiment toward delaying the bomb to reduce the block reward and to introduce changes to the hashing algorithm. However, it's unclear how we proceed from here." This was said by the communications officer for Ethereum software provider Parity Technologies, Afri Shodan, told CoinDesk. In the run-up to the meeting, debate has been building up on social media for quite a couple of weeks. I'm sure you've heard me mention it a couple of times, with many of the platform holders holding in compatible viewpoints. And because the outcome will impact stakeholders in conflicting ways, Jameson has invited a number of people to the call to give their positions on the proposal. I'm not going to read through some of that. So pretty much adding urgency to the current discussion in the so-called difficulty bomb, a piece of code locked into the platform that makes its blocks steadily less efficient to mine over time. Because delaying the time bomb also impacts issuance, there are a total of 6 conflicting proposals, each offering slightly varying methods for moving forward. 2 proposals on the agenda for Friday's meeting seek to reduce issuance, something some Ether holders believe is too high. Currently, the inflation rate is fixed at 3 Ethereum per block, down from 5 where it was last October. While there's a host of Ethereum investors who have yet to publicly comment on the matter, several investors have taken to social media to call for a reduction to Ethereum issuance, contending that the current inflation rate is an unnecessarily high tax on the holders of the cryptocurrency. For example, some are pointing to a quote attributed to the creator of Ethereum, Vitalik Buterin, in 2017 that states, "In the foreseeable future, the supply will not go above 100 million, a figure which has now surpassed. So as far as the difficulty bomb, we have, I think this is it right here. Yeah, we've known about this for quite some time, and this is where I said Ethereum is having a bit of issues when it comes to what they said before in 2016 and early 2017 and kind of where we are right now. Pretty much what was supposed to happen, or what is supposed to happen, is that at some point Ethereum would hard fork in order to be able to implement a number of the changes that they plan on doing on the network. But along with this, in order to reduce or stop the risk completely of having an Ethereum Classic 2, is that they introduce something called the difficulty bomb, where pretty much imagine a tree is getting split in half, and as the tree is getting split in half and it continues to grow for whatever reason, as nature would see fit, they pretty much plan on hampering one side of the chain or introducing a difficulty bomb so that only one chain can continue, and that the other chain that would have forked off or other people could use, as they say, no, that's the real Ethereum. The same exact thing with Ethereum Classic. It would have this thing where it would become so difficult for anyone to actually mine or even use the network that people would completely just abandon it and it would completely die. So this is kind of the idea behind the difficulty bomb. We were told about this last year or even 2016 when I think this was proposed. As the upgrades have not happened on Ethereum yet, the difficulty bomb is still moving closer. So it's time to kind of deal with it, because the only way that they wouldn't have to kind of touch the difficulty bomb is if we actually had the upgrades that were promised 2 years ago. As we do not have them, this is going to be a problem for everyone. So they're going to definitely have to stop this from happening. Continuing on. That said, some are arguing that despite high issuance, miners that rely on general purpose hardware are already suffering. They said there is basically zero profit right now for normal GPU miners. As detailed by CoinDesk, while Ethereum was previously thought to be GPU friendly, ASIC resistant cryptocurrency, the specialized mining chips have been available for use on the network since March. Leading advocates of GPU mining argue that efforts should be made immediately to remove the hardware from the platform. In the past few months, the questions of ASIC's resistance largely fell quiet, but comments around tweaking the difficulty bomb and underlying issuance model have caused the arguments to reactivate. And that's because proponents argue that a reduction in issuance could push the last remaining GPU miners off the network that are already competing against a rising hash rate. Several stakeholders are pointing to a proposal named EIP 1057 as a method for ASIC resistance that uses a randomizing ASIC resistant proof of work algorithm originally designed for Monero to remain resilient against ASIC hardware manufacturers. They're trying, this is another thing on the side of the upgrades, because these upgrades have taken so long. At this point, we should have been using proof of stake on Ethereum. This is why we had a proposal or an announcement a couple of weeks ago that they're thinking of doing or introducing a hybrid when we do get finally the upgrades of having a proof of work, proof of stake, proof of work being where you have all those gigantic computers everywhere that are mining cryptocurrencies such as Bitcoin, and proof of stake where pretty much you can do it by yourself on your own computer, or you can join a mining pool, but it's not as energy intensive. So along with that, we have the entire discussion of allowing people who are using ASICs to kind of be able to continue to mine as the price of Ethereum has fallen so much, especially since the all-time high of 1,300 last December, January. We're now sitting around 200 something. So it's kind of the bare minimum. A lot of people are starting to complain. And then also the inflation rate at the moment is very high on Ethereum, which is not something that a lot of people want, because when it comes to cryptocurrencies, a lot of people talk about the, like digital scarcity, which I think is complete nonsense because they're just numbers on a screen, what have you. Especially when you add in the entire forking argument. If you can fork something and then double the coins of it, the scarcity isn't really there. But when it comes to the purists who believe in a certain blockchain that it is or should remain a certain way, they typically want to follow, or a lot of people are trying to follow, the Bitcoin method, or even the other method where people are burning coins, i.e. You can mine as much as you want for a set period of time, but eventually there will be a cap. Or this is how many coins that are out there, and every transaction that happens after that, these coins will be burned. So you either have an even platform where, you will have the 21 million, or you start out with a number and then you have a deflationary coin, which also will then increase the amount or value of your coin as you kind of go along. Of all the problems, stakeholders, developers are perhaps the most difficult to pin down, especially as many avoid taking a position in polarized debates, preferring instead to focus on delivering code. Still, among this group, there's a general tendency to be less interested in the question of issuance, in part because there's an attitude that the high valuation of Ether reduces its usefulness within the platform. For many Ethereum developers, for example, the question of ASIC resistance is also of important ideological importance because it relates to the underlying decentralization of the network and therefore its resilience to attack. Others hold the inverse position, believing that by raising the cost of attacking the network, ASICs are comparatively much more expensive than GPUs. The hardware is good for security. It's very difficult to be able to give an answer as to exactly what should happen. One, because no one knows the future. None of us are 20 years in the future, so we don't have the hindsight to see exactly what the exact answer is. We have so many proposals going on because everyone believes that their certain thing is correct, what should be done on the network, how they think the network should end up developing. This is why decentralization is great and why it also poses an issue. Because whereas you have an entity who says, no, this is definitely going to happen, they move forward, it's a success, or they move forward and it's a failure, you can tend to then see what the final overall answer is. But when you have several hundred people, maybe let's say around 35 people, who are probably going to be on this call talking about what they think should happen or what is going to happen or what could possibly happen or how they feel a proposal should go forth, because heaven forbid, should one of these proposals go through and then it's not correct, you want to be able to have, if you have a decentralized network and a decentralized system, you want to make it so that everyone more or less has a fair chance when it comes to mining, when it comes to their voice, because this has also come up many times before. I told you guys, as humans, we look for faces when we look for information, in that when we look for information from Ripple, people look to Brad Garlinghouse. When people look for information from Ethereum, they look to Vitalik. When people look for information from or about ADA or Cardano, they look to Charles Hoskinson. Everyone needs a face, but when you have a face, this defeats decentralization, kind of. Even though there are other people who you can go to for information or who could, whatever, typically it's one head of the top of the pyramid who ends up giving the final voice of it, and then it kind of leads to the question, okay, how decentralized is your platform, or how decentralized is crypto if we have to ask someone for their final word? It's like asking a king. You know, a king has, not to say servants, that the coders are servants, but you kind of get what I'm saying. There's the person who made the kingdom, and then the people who kind of help protect the kingdom. But when you ask a question or tend to get an answer, it's usually from the king who created the kingdom. So this is apparently going to happen today. I think it said it's going to be live streamed somewhere. No, yeah, live streaming meeting. If you can, I would just go to Coindesk.com and type in, or rather go to Coindesk.com. I'm pretty sure it's going to be the top headline for quite some time. If you plan on live streaming and or watching this, I assume if you've ever watched the other Ethereum live chats before, they can be pretty dry, as they don't really hold back as far as like making sure that normal people understand what they're talking about. So I'll sit there sometimes and my eyes will kind of go crossed, because they don't hold back when they're talking about all the techie stuff. But it could be something interesting to listen to. I am going to assume that this is probably going to happen. I told you guys before about this. Actually, this was on April 1st. This was so quite a bit ago. And I'll tell you why it was updated on the 2nd. On April 1st, Vitalik Buterin said that he was going to limit the cap of the amount of Ethereum that are floating around at 120 million. Everyone was like, that's great. Let this happen. We need this to happen right now. And then on the 2nd, this was updated because he said April Fools. And then come to find out, the price of Ethereum actually slipped down a tiny bit because people wanted some type of a hard cap, because what actually happened was recently is that we actually passed by the 100 million Ethereum issuance, and we've already printed or created an additional 1.5 million. Not that that's a red flag, but there's a lot of Ethereum out there. So we're going to have to come to a decision very quick, because in the next 18.5 million Ethereum that are created, if we slip past the 120 million Ethereum that are out there, or rather that are going to be created, I can assure you that there will be some type of a huge decline in the price of Ethereum. Even though I said like digital scarcity, especially when it comes to, so on the entire topic of this, a lot of people, a lot of investors don't know that Bitcoin can be broken down continuously fracturally. And I'd mean as far as like not even like 0.01 Bitcoin, but that if they wanted to, or I think even right now, I think Bitcoin can be broken down to 20 decimal points. So everyone, there's some for everyone, but I think it comes down to like owning a full of something. This is typically what people want. Anyway, on this entire topic, I assume we'll hopefully have some good news. I don't think they are unintelligent enough not to put some type of a hard cap. I assume the difficulty bomb will be delayed. I assume they can push that back sometime in the code. And as far as the entire ASIC thing, who exactly knows? A lot of other coins, a lot of other major coins have made it so that that certain mining equipment can no longer be used on their networks. And I guess a lot of people say that it gives some people an unfair advantage, what have you. But then you get into the question, is it okay for them to be able to control what other people are doing on the network if it's supposed to be decentralized and everyone has their little slice of pie, or is trying to gather more slices of pie as they continue to mine it? Is it okay to then tell certain people, no, you can't do this, even though our network is decentralized and no one has control? Someone clearly would have control if everyone is, or rather a small amount of people are then able to tell everyone else. More or less, that is exactly what's going on with Ethereum today. It's a lot. Believe me, I understand this a lot. If anything significant should happen from this, I'll obviously tell you guys. I know a lot of people don't have the time to go around searching for all the news. This is what I'm here for, to try and give you a heads up or leg up. I think it's a heads up on exactly what's happening in the cryptocurrency space. Next up, this is actually quite surprising. I don't know if anything will come from it. The U.S. Securities and Exchange Commission, or the SEC, has said it will review the disapproval orders for 9 Bitcoin ETFs issued on Wednesday. As CoinDesk previously reported, the SEC staffers rejected proposals from 3 companies, ProShares, Granite Shares, and Direction, in a triple set of orders published late yesterday. Now, according to the letters, senior SEC officials will review those orders, though it's unclear at this time when the review will be completed, as SEC Secretary Brent Fields wrote in a letter addressed to the NYSE Group Senior Counsel David DeGregorio. So what's really interesting about this, if you saw the video yesterday, I'm pretty sure it was yesterday or the day before, whenever they were rejected, the ETFs that were being pushed through, the SEC kind of said that they didn't really even thoroughly look through the ETFs. A lot of them were just simply rejected, and I'm pretty sure it's because, at least to me, they're probably trying to give the CBOE not importance, give them the first shot at being able to have it, simply because the CBOE also has the future. So I think they're also trying to do the exact same parallel thing around the exact same time of year, maybe to push up the markets. Who knows exactly what the case might be. But the fact that they said that they're going to go back and review them says that they didn't review them before. Maybe something will come of this. Who exactly knows? They said this letter is to notify you that, pursuant to Rule 43I of the Commissioner's Rule of Practice, the Commission will review the delegated action in accordance with Rule 431. The August 22nd order is stayed until the Commission orders otherwise, end quote. Not going to read that. The news was announced by Commissioner Hester Pierce, who notably dissented from a decision last month that saw the SEC shoot down for a second time a proposed Bitcoin ETF from investors Cameron and Tyler Winklevoss. Hester Pierce, for those who weren't here for that video as well, was one of the members of the SEC who I believe was the only person to ask for approval of a Bitcoin ETF. She was rejected by 3 other members, I believe, who were on the board. And since then, she has been relatively out there or outspoken about the entire thing going on. In a follow-up tweet, Commissioner Pierce explained the steps to come as the SEC moves to review these decisions. She said in English, "The Commission, the chairman and commissioners, delegate some tasks to its staff. When the staff acts in such cases, it acts on behalf of the Commission. The Commission may review the staff's action as well as will now happen here." These are the actual letters. Definitely not going to be reading through these. Let's see if anything will actually come from this. I am not holding my breath. It could be noteworthy that they're planning on... It's so stupid. You can't review something that you already have rejected. That's like you taking a test, you getting a 0 on it, and then your teacher going, okay, I'll look back over it just to see in case you might have actually passed. It doesn't make a lot of sense. Hopefully, a lot of people are still torn as to what exactly should happen on the Bitcoin ETF side. A lot of people don't like the government or any type of government interference in all of this. On the other side, we have the NASDAQ coming out and stating that the things that they do plan on launching on their platform, the Bitcoin futures, and I assume some sort of proposed Bitcoin ETF in the near future, that they will actually be, you will be required to trade in physical Bitcoin or pre-funded accounts and not through paper trading, i.e. you can't just continue to print off paper, such as many countries do with their currencies, and say that you are holding something that you are not actually holding. I think when we do get some type of approval of a Bitcoin ETF from the SEC, I think the market will completely go insane. I hope it actually holds this time. A lot of the hype from the last time that we shot up in price was because of the futures approval, and then there was just kind of this like euphoric high that just continued. Prices kept on going up, and then we saw that people shorting or betting against the price of Bitcoin in the futures had a detrimental effect to the entire market. So let's hope that whatever may be in the near future when it comes to all of this stuff, that something positive happens for all of us, and that we don't just have another 4 to 6 weeks hyper bull market that ends up floundering for another 8 months. Next up, US-based cryptocurrency exchange Bittrex is partnering with a regulated alternative trading system, or an ATS, with the aim of ultimately launching trading in crypto securities. Sorry about that. In an announcement Thursday, Bittrex said it was working with Rialto Trading, which currently offers fixed income products for traders, to gain regulatory approval to support blockchain-based securities. This was according to a press release. If approval is granted, Rialto plans to launch a comprehensive securities offering, including an issuance advisory service, placement, trading, and custody. For the system, the firm will leverage its ATS and its tools to use to support its existing offerings alongside Bittrex's blockchain, cybersecurity, and cryptocurrency trading tools. The release adds that the ATS will support US dollar trading for digital securities. That might be the most important thing that you will hear today. Bittrex CEO Bill Shihara said, "It takes a unique combination of advanced technology and financial expertise to build and launch an efficient, reliable, and secure platform for trading digital securities. The partnership will also bring access to a larger market for Rialto's clients," said CEO Shadi Noonan. She added, and I quote, "By working together, we will also be able to expand our current client offerings to not only include digital securities, but also provide them access to a globally advanced and reliable trading platform," end quote. A lot of people are a bit confused as to why, when we had the discussion about if first of all, if Bitcoin was a security, and then if Ethereum was a security, and then still the news that we do not have if XRP is a security. I think at this point, the US government and a lot of other countries around the world have all stated that they believe that every ICO currently out right now is a security, whereas, or rather, they're securities because the company or entity that is issuing them, when you buy the ICO token from them, you are expecting a profit, and that is the major thing. So the argument has always been, if you have gotten a coin from some company or entity and you are expecting a profit from their actions, therefore you are holding a security. What a lot of people don't understand, and I've tried to say it before, but I think I rushed through it in an effort to kind of bring you guys the news. Securities are also stocks, bonds, mutual funds, and other things. Sometimes it can also be real estate, depending on what time or type of real estate that's really out there. We have a lot of firms who are announcing that they are going to be allowing STOs to launch into their platform, and this isn't something that you may have heard about for a number of reasons. Whereas ICOs, similar to IPOs are pretty much ICOs that are launched on the stock exchange. So pretty much you have an initial public offering. This is what kind of Facebook did in order to launch their stock. And then on the digital side, we have ICOs, which is what a lot of people in the cryptocurrency space have been dealing with. On the next front, we have STOs, security token offerings, and these are going to be, these are the future. A lot of ICOs are, since the beginning of this year, not even 2017, the beginning of this year, I believe something like 65 or 75% of ICOs have completely collapsed and or are gone or were scams or they took the money and ran. What's happening is that countries know about this. They're not happy with it. They say that they're doing it for consumer protection, but to be completely honest, they're probably doing it because they didn't get their slice of the pie, if you understand what I'm saying, because a lot of the times when ICOs are issued, and the people who have made, I think there was one ICO that made like 30 million or something like that a couple of weeks ago, and they completely disappeared. The government has not gotten their hunk of change from all of this happening. So we have something called security token offerings. Securities are also things that can be listed on major stock exchanges. And lo and behold, they also have to be regulated through the SEC or the Securities and Exchange Commission. So in order to have a security token offering, you have to have already registered with the SEC. And along with this, you are going to be able to do an immense amount of things, pretty much digitizing anything that is considered a security, pretty much tokenizing it and creating an offering for it. And this is why I said you may not have heard about them, because these are going to be, when I told you before that crypto isn't going anywhere and it's going to be for the elite, this is the beginning of it. These are only going to be offered, at least for now and probably for the foreseeable future, to institutional investors. Those are people who have very deep pockets, who are intending or who would like to buy securities. Whereas, you may have been able to buy them before through the NASDAQ or the CBOE or any other exchange around the world. You will then be able to do these through a number of even crypto exchanges. And this is where it gets interesting for us, but also not so much for us, as, typically you can't get into these things unless you have around $3,500,000 in order to be able to put your money into. But when these things are actually offered on crypto exchanges, which is going to be very interesting, and a lot of them do eventually allow retail investors, that's me and you, normal people, will then be able to buy into companies directly through crypto exchanges. So if you had ever had your eye on a company that has digitized their tokens or their offerings or something that they may own, let's say Apple ends up creating another, I don't know if you've seen their most recent, this isn't it, their most recent, not lab, offices or whatever, it looks like a gigantic spaceship. Let's say they create another one. They decide that the land that it's on allows them to be a security because of what they're offering from that land. And you decide that, I think Apple's going to do very great in the near future. I would love to buy a piece of their offering that they have for that land, and that you would own a fraction of the land if you bought their token. You would then not have to go through any of the major or traditional financial offices. You'd be able to do this through a cryptocurrency exchange that is offering security tokens, especially if that token that they are offering is through that company. If you kind of get what I'm saying, I know it's a bit confusing. It may take a while to kind of grasp, but ICOs are predicted to be dead by next year unless they are done on a massive scale, only accredited investors, and the SEC knows about it from the very beginning. A lot of ICOs that are launching right now are almost exclusively through the SEC. You have to be hard pressed to find one that are launching in any other major in quotes countries that have a strong not government economy that is not made sure that people are using their SEC in order to be able to launch these tokens. But when we come to, I think the next thing that we're also going to talk about also has to do with securities. These are going to be it. ICOs are pretty much going to die simply because they can't be regulated and the government doesn't like that. So they're going to try and find a way to squash them out. But eventually, everyone is just going to be moving over to STOs. And then by around 2020, STOs will be as commonly heard as the word ICO is heard right now. On the same exact discussion, the international crowdfunding firm Indiegogo will promote a new real estate-backed token, according to a post on the company's website. The asset-backed cryptocurrency will enable accredited investors, rich people, to buy shares of the St. Regis Aspen Hotel in the form of digital tokens. I'll explain that in 1 second. According to a report from The Verge, the upcoming digital token Aspen Coin is registered, like I said, with the US SEC, the Securities and Exchange Commission. It will be available for purchase with US dollars, as well as major cryptocurrencies Bitcoin and Ethereum. The crypto-based crowdfunding project aims to raise $12 million of investment from the St. Regis Aspen Hotel and is reportedly set to be launched tomorrow. Okay, that's today, the 24th of August. In December 2017, San Francisco-based Indiegogo announced the launch of the first ICO pre-sale in partnership with equity crowdfunding website Microventures. In the announcement, the company says that it partnered with Financial Industry Regulatory Authority, FINRA, registered broker-dealer Microventures, in order to ensure offerings are SEC compliant. Like I said, you cannot do anything right now in the US or around the world without the SEC. As The Verge reports, co-founders of Indiegogo, Slava Rubin, said that cryptocurrencies and security-backed tokens are two very different things. He also emphasized that asset-backed tokens are less speculative and they're likely to pan out in the future. So I'm going to try and work backwards from all of this, let you understand exactly what all of this means. I know it sounds like mumbo jumbo when you kind of hear it, but it all is extremely relevant. Cryptocurrencies are things like Bitcoin, Litecoin. I can't think of many other, you kind of get what I'm saying. These are the cryptocurrencies. These are the things that have not been labeled securities. Security-backed tokens or coins are going to be things that are backed by something. So whereas Bitcoin is backed by our trust, by our belief in the system, by the idea that Bitcoin will be able to take over the world and will be this crazy, amazing thing that will take over the world and, be there in the future, security-backed coins are going to be tokens that are backed by the value of stocks, bonds, mutual funds, or even in this case, real estate. So these are going to be major in the next couple of years, simply because we have entered a world where it's going to be possible to be able to own anything. And I mean anything. If you have ever, in the next 5 years, if you've ever wanted to own a house but don't have the money for a house and you wanted a fraction of the house, you will be able to do that. If you ever wanted to, there's something going on right now where I think they digitized, if you will, a Van Gogh painting, and they pretty much separate. I think the painting was $100 million US. They separated it into, I believe, fractions of 100. So if you happen to have $1 million, you can then buy that portion of it, and then should or when the value of it actually goes up, you can sell your portion on the blockchain once again, and you'll be able to then receive that how much ever it made in profit back into your wallet or into your bank account, wherever the case might be. This is going to happen. I had a friend, not the same friend, but before, I had dinner with a couple of friends a day or two ago, and the friend realized that I was actually into cryptocurrencies, and he was asking me, I don't think he watches the videos, but hello anyway if you are, and he was asking me what did I think would be the most interesting thing to invest in right now. And I couldn't give him anything right now except for cryptocurrencies, which I'm already into. And I told him, and I may have mentioned this before, maybe not, in the future, when everything, so they're trying to, a lot of companies and institutions, this is maybe why you have heard me say a lot of, they're all trying to make security tokens or security backed tokens or security this or security so-and-so. Why Coinbase and everyone else is trying to become a holder of securities is because people are now digitizing diamonds and homes and boats and cruise ships and all these other things, putting them onto a blockchain, and they're making security tokens from them. In the future, let's say you want to invest in something, but you only happen to have just $10,000. Just being, typically when you want to invest in something heavier, you need a bit more than 10,000. Let's say you only have 10,000, and you figure out that you also want to be in some type of ride sharing service. In the future, you will be able to take that 10,000, bundle up with 9 other people who also have 10,000, so you have 100,000 in total, and you will be able to buy a self-driving car that is digitized on the blockchain, whereas so pretty much you 10 will hold an equal amount of this car. So you all hold 1/10 of the car. One day you all get together, you're having coffee, and you're like, let's do something. This car isn't really making us a lot of money. It's a really fancy car. We get to drive it on the weekends, what have you. But we're not making any money from it. So you all decide that you want to make it an Uber. You make it an Uber, and as it is a self-driving car, it drives itself around, and every time that it picks up a passenger, you will be alerted of this, and every time the passenger gets out and has paid for the ride, you will all receive an equal share of the amount of money that ride took. So let's say the ride costs around $30 or 30 euros. You will all then receive $3 or 3 euros per ride that is happening. Even more so on the craziest part of all of this is I was listening to something about the future. There's a Wall Street Journal podcast. It's called WSJ, The Future of Everything. I'm not sure if it was actually on there. I'm pretty confident it was on there. They were talking about in the future when we have self-driving cars or when we have investments that will be able to take care of themselves. Whereas in right now, you have a car or something that you have purchased or that you find that has value. In the future, when we have self-driving cars, the cars will be computerized as they are computers. And they'll be able to identify themselves if they're running low on petrol, if they're having some type of problem, if they need to be recharged, whatever the case might be. And they'll actually be able to drive themselves to the mechanic by themselves in order to get fixed. So you will never, ever even have to touch that car. You'll be able to go online, buy 1/10 of a car that is somewhere out there driving around, picking up people. You'll look at your crypto wallet. You'll be paid in crypto, however you just decide you want to be paid. Should your car be damaged or something like that, it'll take itself to the mechanic and repair itself. Not repair itself, but it'll be like you won't actually have to touch anything. We're going to have a very interesting couple of years, and this is why I keep saying that, one, we're lucky to have figured out what crypto was. 2, we're lucky that we got into it when we did. And as all of this continues, one of my major plans, just to tell you guys, because why not, is as crypto takes off and I eventually do sell a bit so that I can profit, I plan on investing in a lot of these things. I plan on the entire, I plan on investing in anything that I possibly can that will make me money, as I am an investor. But I'm very interested in being able to do a lot of these things as well. I'm interested in being able to buy an entire apartment building or block of flats that I can own fractionally and still receive rent from without even having to actually touch anything. I hope you all understand the significance of how crazy this is going to be. A lot of the other stable coins that we are also going to have in the very near future, I think we're up to now number 11 or 12 that has been spoken about this year, is that a lot of them, if you have guessed, are going to be actually be backed by real estate. And why are they going to be backed by real estate? As of right now, you may have noticed or may have heard or may have seen that we have Tether and we have True USD, and a lot of the stable coins that we have are trying to be backed by the US dollar. The US dollar, if you look at if you get a chance, go to Google on your phone or on this video and Google US dollar value decline or US dollar value graph, and you'll be able to see that over the last 30, 40, 50 years, the US dollar's value has completely crumbled. So, oh my gosh, this is so interesting and there's so much to talk about. If you look at the value of land and how scarce land is, depending on where you live, especially if you live in a big or major city, or even not, even if you live somewhere in the suburbs, you may have noticed a huge amount of development. I'm not a psychic. You may have noticed a huge amount of development or new houses being built around you. Land is becoming incredibly scarce, and the government knows this, and they're making sure that certain parts of land, whether it be for national protection or national parks, that these things can't be built on top of. This is why you see in New York City, a lot of places are building these gigantic towers, and everyone's like, who wants to live in these 90-floor towers? Everyone can't build sideways anymore. You have to build up. So when you do find the space to be able to buy property or something like that, if you find land for it, you have to kind of grab it as quickly as you can. This is why I said you see a lot of construction around where you live, or even if you're in the suburbs. As land is becoming more and more scarce, a quick side note, I cannot and will not ever tell you what to do, but if you are looking for a strong investment, look into buying land, especially land that you can sell things on top of, i.e. you can have goats or cows or cattle or what's the other word? If you can grow wine or anything like that on there, or if you are able to get into real estate, look into it. The future is not very bright for a lot of people who are going to be wanting to own these things in the future. But back on the topic of all of real estate, I guess we're still on the topic of real estate. When it comes to the new stable coins that we are going to be having in the near future, a lot of them are going to be backed by real estate. And I couldn't figure out why for a long time. Every time I was reading an article and they were talking about it, they were talking about it as well in a couple of podcasts. I think Unconfirmed, the podcast, is also one of them. And they mentioned, and it kind of clicked really quick, they said when it comes to having your coin or stable coin backed by the US dollar, if the US dollar or the euro or the yen continues to decline in value against other things or decline in value in general, your stable coin is then trash. But what happens if you back your stable coin by Manhattan real estate, or by real estate in Florida, or you decide that you want to back your, imagine they said in the future, we're going to have stable coins that are backed by blocks worth of real estate in Paris. So if you are in the center of Paris and you decide, I want these 15 blocks, I want my stable coin to be based on the value of these, every single year, the value of your stable coin will not be based on the fluctuating US dollar, but it will be based on an asset or an entire 15 block area of assets that are raising in value by 15% every year. This stabilizes the value of your coin, kind of makes it more valuable, but you still get a stabilization as far as price, because the prices tend to kind of be predicted. I didn't really mean to spend that much time on these, but I want you to kind of get the gravity of the situation that security tokens are going to be absolutely massive. This is why I think the entire thing with the NASDAQ is very significant, but I think a lot of people don't understand, aren't paying attention to what security tokens are going to be. We already have the NASDAQ, which is already able to list securities, stocks, bonds, mutual funds, what have you. And the fact that they are going to, I'm pretty sure this has been announced as well for them, that they're also going to be able to list security tokens on there, this means that everyone is going to be digitizing everything. They're going to be listing it through the NASDAQ or their cryptocurrency exchange, whatever you want to call it, whatever they have, whatever the finalized name is going to be. And you are going to be able to invest in just about everything that you could have never done before, that our parents wouldn't, our grandparents were never able to do. If you wanted to buy something, if you wanted to, they were talking about being able to digitize like Bentleys and Maseratis and stuff like that. Like if you have these cars and you rent them out to people who are on holiday or on vacation and they want to take a, spin in them, and it costs them $200 an hour to do so, to be able to live out their fantasy, you and other people, you and 100 people can then own 1/100th of that car, and you then get money every single time that someone gets inside of that car or is inside of that house, or you owning a fraction of a house with other people if someone's Airbnb-ing it. Because before you couldn't really do this. It was kind of by word of mouth. I'm pretty sure you have seen documentaries or movies or TV shows or court TV shows, depending on which country you live in, where people are arguing, we had a contract, this didn't work. With blockchain, it doesn't work that way. If you sign something on a blockchain with 100 other people, even if not at the exact same time, and you say, I'm supposed to get 1/100th of this, it is going to be written on the blockchain. The blockchain is going to know, the smart contract is going to know, and you are going to be paid out your money regardless if any of the 99 other people who you are on there with, even if they hate you, even if they don't want to pay you out. It's not about them transferring money to your bank account. It is about the blockchain knowing if it's on a hyper strong blockchain that has like tons of whatever. It's a relatively strong blockchain that can't be destroyed or will not be destroyed, especially if they build stuff on top of Bitcoin or Ethereum in the near future. Your money is going to be guaranteed every single month. There's no one who will be able to hold the money back from you. I want you to get what the future is going to be. A lot of people aren't understanding just how bright the future is for cryptocurrencies or for security tokens, everything. And I know it sounds stupid or weird because you look at physical things around you. Everything will be able to be digitized. And when you're able to digitize it, you're going to be able to use it and to fraction it off in many ways that you never even thought possible. There are a lot of people who are listening to this video right now. In 5 years' time, you will probably own a fraction of a Van Gogh or of some other famous artist or even of a Banksy. You will be able to own fractions of all these things, or a home. You want it to be a homeowner, you'll be able to do it through a security token. Simply because it is on a blockchain, you can own fractions of it. And I mean, it's all incredibly, I love investing. I love making money. I love the idea of weird investments as well. Like I think this is kind of why I got into cryptocurrency, because it seems so odd. You don't hold it, you can never really touch it. It's just on your screen. It's on some type of exchange. It's just ones and zeros floating around, but it makes you money. It goes up in value. And then when we can digitize everything, when you can digitize your car and rent it out to other people, it's all very fascinating that we're entering this world. I was listening to another podcast and they were talking about that they think that we are in, I think something like the fourth transitional phase of human society, whereas I believe the third revolution was anything to do with like petrol or machines. The fourth one is going to be electricity. Everything that we have, our cars, our homes, solar panels, all these different things are going to be run on electricity. Everything that we have will just be electrified in some way. Our money, cryptocurrencies, will be based on and are based on electricity. We'll need electricity nonstop to be able to do this. So I don't know. I find it all very fascinating. I'm pretty sure you can tell. I'm going to move on from here just because I'm slowly running out of breath. But you have to understand how, like, what the impact of this is going to be in the next 5 years. That you are ahead of the market and ahead of the curve because you understand these things. When people are trying to get into these things and they have no idea what's going on, you're going to know. You're going to know exactly what's going on. You're going to know exactly how to get into it. You'll know how to use these cryptocurrency exchanges. You'll know what a blockchain is. You'll know what proof of work is, proof of stake. You'll be able to tell your friends, and then you'll be the one who kind of shows them how to make money when you have already made money from a system that you got into 5, 6, 7 years ago. I'm going to move on. I'm incredibly interested in every single part of cryptocurrencies. Last up, on the Joe Rogan podcast, or the JRE podcast, American singer-songwriter Shooter Jennings and Joe Rogan discussed Ethereum-based Twitter alternative ppthe, or ppthe, depending on how you want to say it, which allows anyone to release permanent tweets embedded into the blockchain without censorship. Throughout the podcast, Rogan and Jennings went back and forth on the Alex Jones situation. This one is not a political channel at all. We just talk about investments. So nothing political when we talk about this. Sharing the general sentiment that Facebook, YouTube, and Twitter should not have banned Jones, disallowing free speech. In response, Jennings introduced a decentralized social media platform called ppthe to Rogan, describing its immutable and anti-censorship features. He said there's this thing called ppthe. It's a Twitter alternative. It's just starting. It's kind of like Twitter, but it's built on the back of Ethereum. So every tweet or every message you send on it is embedded in the blockchain of Ethereum. Not going to read too much more because it gets kind of political. The point is, one, I'm not sponsored by, I do not know the people behind ppthe or ppthe. I'm not being paid by them, don't know them. This is not a paid sponsorship thing. I'm talking about it because I like things like this. We are in a world right now where major companies are devouring our data, are using our data. I'm surprised Google's not even on this. And one, we're not even being paid for it, but they're making billions and trillions of dollars of it. And they're also censoring what we can say. So they censor what we can say, when we can say it, how we can say it. And anything that we do say, they still gobble up and then sell to other people. So we're not making any money from. Not that you can even make money from ppthe. This is what I told you guys before when I was talking about, what is it called? Not Wikipedia, Everpedia. I am 100% for decentralized blockchain platforms that don't run or that are not run by global conglomerates. Because it's kind of getting to the point where it's getting a bit ridiculous. There was something that came out 2 or 3 days ago where someone realized that even if you are on your phone or on your computer and you opt out of Google being able to track you, or you do not have on your GPS or any type of tracking thing, if you even if you don't have it on when you open the Facebook app so that no one can find you or know where they are, just by you signing into a Wi-Fi or your phone signal, your phone will then alert Google as to exactly where you are. This is why you may have noticed a lot of times if you are walking down the street or something like that, Google will alert you of something in your area. That has definitely happened to me before. So we're getting to a point where a lot of other companies or crypto entities are trying to figure out how to make, not even to make these decentralized anymore. It's more or less to create new platforms for people to go to where they aren't censored, where you can say what you want, where your data isn't being collected or sold by other people. I told you guys before, there's also an initiative that's happening right now where people are trying to create a Facebook type platform where you can go on there, add your friends, do all these other things, and they alert you that, they may be selling some of your data, and that, we see that you like boats and you talk about boats a lot with your friends. Can we sell this data to a boating company who may then want to give you boating ads? And if you say yes, they will also then pay you a fraction of the profits that they made from that company who they have sold your data to. Part of the issue is that these are mega forces right now. I don't know if at any point they're going to be dismantled, but I think in the cryptocurrency space, if you truly believe in it, this is not me telling you to use ppthe, but if you are concerned with people taking your information or knowing what you are saying or deleting what you are saying or saying that you cannot say something that you would like to say, this is why I talk about these platforms. I hope eventually that we get something relatively similar to Facebook or Twitter, especially to Google, especially like I don't think people understand how much Google actually tracks you. It's actually kind of terrifying. Google knows everything about you, even if you don't believe so. If you have not Googled your name, try to Google your name or Google your company or anything that you may have. They know everything about you. They also know your search history, what you look for, when you've looked for it, if you've copied any links to your friends or family. So just pay attention to what you put out there. I know there are alternatives to Google. I can't remember the name of that's a shame. I'm sure you can Google it. That's the sad part. There are a lot of other things out there that are completely private. There are private emails, there are private Twitter things, there are private platforms where you can still get the same experience, but no one else knows that you are using it. That's all pretty much I have to say about this entire discussion. I hope that more things end up developing, even if it's not Ethereum, on EOS. I don't even care if it's Tron at this point. I just want these other platforms to be out there. I want to live in a world where we don't have to be afraid of what we're saying, where you get afraid for saying something and then someone else takes down what you've said or you get penalized for it. I want it to just be, even if you may disagree with what someone has said about something, I still believe that free speech should be had. As we all have our own opinions, I may not be right on everything, but I still have my own opinion. it kind of is what it is. I hope you guys enjoyed. I know this was a pretty intense video. I want everyone to understand, like I always say, if you have 5 minutes, find information on security tokens and exactly what they're going to be. I'll try and find, even if I make another random video where I find information about what security tokens are, so you can actually like maybe listen to it, or maybe they explain it a bit better than I do. It's going to take over the entire world. They're talking about digitizing everything that does, even things that don't even have value, but especially things that do have value. Imagine being able to own all of these things, or a fraction of these things, or someone puts a hotel up for digitization, and then you're able to own even like 1/1000th or 1/10,000th of a hotel, and every single hour you're making about $3 or $4 extra that you wouldn't have made before, simply because you put in, let's say, $5, $10, $15, $25,000 onto it. It's all completely exciting. I can't wait for a world where the term passive investment or passive income is the most passive thing in the entire world. It's just you entering a password into a website, walking away, and then you look at your phone, and every couple of minutes you see that Bitcoin or any other crypto out there is being deposited into your account rapidly. Anyway, everyone, that is 100% going to do it for this video. I hope you guys and gals enjoyed. Hope you're all having a great day, morning, afternoon, and or evening, wherever you are, wherever you might be. Thank you once again for watching and or listening. I hope you understand the gravity of what security tokens are going to be. And I will talk to you all soon. See you.